Good morning. We're here to make a brief study on ALDN, and we'll start by technical analysis. This is the long-term chart going back to the company's IPO in '94, I believe about $6 a share. And you can pretty much see what happened. The stock was below $1 here, then it went to 25, and consolidating that move for the past 2 years, I believe. Yes, 2 years. And let's check the short term. Well, yesterday with this very high volume, the stock had this breakaway gap above this medium-term descending trend line. So I consider this a technically bullish sign. And over the short term, here's that big gap, but the news was, I believe, pretty significant. So this is fully justified by the fundamentals. We'll check the fundamentals next. So I believe the chart is now bullish. It wasn't, but it is now with this bullish breakout, with explosive volume. Fundamental analysis. Well, this is the share count since '97 and the market cap. This yellow line is the market cap. It is just 280 million now, so this is a small cap. And the share count has been growing at a 3.9% compound annual growth rate since '97. Base year is '97. It is 14.6 million shares now. And the market cap has been growing just 5.1% since the company's IPO to 280 million now. Moving on. ALDN long-term debt and current ratio. Well, there's no long-term debt. There wasn't any over the past 10 years. And the current ratio shows a very healthy picture with 6.3 of current assets. The ratio between current assets and current liabilities is 6.3, so very healthy. And cash plus marketable securities is 91 million for a 280 million market cap, also seems very healthy. The cash pile has been growing at a 52% compound annual growth rate since 2004. And the receivables are also growing a bit, and the inventory is 8% a year since 2004, but not significant numbers for a 280 million market cap. The balance sheet shows a very healthy short-term and long-term liquidity picture. As for revenues since '97 and gross margin, well, revenues in '97 were 34.2 million and 89 million in 2006. Expected for '07, 98.7 million and 110 million for '08. But these estimates were made before big news on Thursday and today, which I believe will increase estimates. Some analysts are already upgrading their estimates for the next couple of years, but this isn't reflected in these numbers yet. Gross margin, it was 77.5% in 2006, so pretty rich. It is going down a bit, but that's not a problem because it's still very high. This is a security software and services company. Revenue has been growing since '97 at just 11.2% average annual pace, and the industry grew 18.3% from 2005 levels. But I believe this growth rate will expand a lot given the recent news. Gross margin for our company is 77.5%, and for the industry average 68.2%. And the price to sales ratio is 3.14 for ALDN, and for the industry average it is 4.04. Okay, move on. ALDN earnings per share and net profit margin. Well, the earnings per share has been quite erratic, but not since 2004. Earnings are growing nicely. In fact, since 2003 at a 49.5 compound annual growth rate, and net profit margin is fat at 15.7%. Analysts are expecting it to rise to 17.5% in 2007 and 17.4% in 2008. So this being a software company, it has fat net profit margins, and this is the kind that I like, as you know. Price to earnings ratio, considering 2007 numbers, is 16.7 for ALDN and 34.6 for the industry average. So it looks like it is trading at a deep discount, about 50% discount relative to its industry here, when we consider these 2007 numbers. But from the recent news, I believe analysts will have to push these estimates way higher, because they were made before the news, and the news is quite significant. So for my valuation model, these yellow lines are known facts: the current share price, the initial share count at 14.6, initial revenue 89 million, initial net profit margin 15.73%, which was the number in 2006. Then I insert my 4 working variables. It is dilution factor. I had 1.04 previously, but after studying this very healthy balance sheet and hearing the conference call, they said they would be buying some shares. They have that plan. So I put just 1.03, but perhaps it will be less than this. Just being conservative here. On revenue compound annual growth rate estimates, here I'm being a bit aggressive with 1.3. This means 30% average annual revenue growth going forward for the next 3 years. But I believe this will be achievable with the presence in India and China, very strong growth markets and huge markets for this company. Final net profit margin 17.5%. This is the average analyst estimate, and earnings per share multiple estimate. I believe with revenues growing at a 30% compound annual growth rate, there's no reason anymore for this stock to be traded at a discount to the industry average. So I put the industry average multiple estimate, which is 34.6. And this gives me these orange lines of 16 million shares in 2009, final revenue of 196 million, final net income estimate, so this is for 2009, of 34.2 million, earnings per share of 2.34 in 2009. So my final estimated share price given these estimates is $81.13, and this means a share price compound annual growth rate estimate of 61.5%. So very attractive. When it is above 16%, I consider it attractive, but this is really awesome. So given this, the optimal selling price today would be $51.98 and a shares, and the stock is trading at 19.26, so very attractive. On a 1 to 10 scale, I give it a 9. Thank you. Bye.